Hi, g'day guys, Sam here from Trade to Prosper, giving you another Bitcoin update. I've come across some new ways of thinking about this, and I thought I'd share that thought about the current structure, the current market, and so on. If we're to simplify this chart, and I'll do it, just give me a sec, BTC, USD, I'll do Coinbase, okay. And what I want to do actually is go back one step. Index, I've got some reference material there, so I want to get that. Or maybe just stick to this. Yeah, I'll just stick to this for the time being. So what we have is an image. And where's that image? I'm going to bring it. That image is here, and the other image is here. So let's have a look at these two images. And then we're going to correlate to this. Okay, so let's get rid of a few things, just make it simplistic. Okay, so this black diagram, or black image, is one of the schematics for Bitcoin distribution. And if I was to simplify this, if I was to just get rid of all the diagrams, and if I was to make this into lines, you can see it's pretty much in par with that diagram that I had. So that diagram over here, we have our top there, and we have slightly higher. This is slightly higher. We have a bottom. Now this bottom, I believe, is here. Okay, I believe that this is another level that is bearish. So I think this is the main support level based on that as well. So what we have is this is slightly lower. We got that over here. Okay, so the thesis is that that is a support level, the main support level based on this schematic. Then we have, when we have that run and we come back down, we have that level here. So it's not down here, is it? It's actually there. So when we have that arch or bear, in a way you can say it's a bear flag or some sort. The magnitude doesn't matter. It's just the behaviors. The behaviors matter, and we had that. We had it there. So when you look at it from that perspective, this should have been here. That we didn't. We dropped down much more below, and we're somewhere around here based on this alignment. Now that's a thesis. There is no way of proving that. It's just an idea. So when we get close to this, the highest that we probably can go is to the 0.618, which is 35k, knowing that this is the main support level. Okay, and are we going to go there? Possible not. I'll tell you how to trade this. I'll come back to it. Now, what gives me more confirmation that this is the level? So let's go back another step. Clean this up. Now I just want to put that to the side. Now where's my Fibonacci's? So I can get rid of that. Get rid of that. Now I can bring this across. No, I don't want that. So if we bring this down. So what this line chart does is it ignores the wicks. Okay. Actually, I would like to hide that as well. I'll get back to that. So I'm going to put it back to the candlesticks. I'll get and I went through this yesterday. I get the bottom to the top. Okay. And then we zoom. So I use that bottom to the top, and I've got my Fibonacci's. Now let's zoom in. Drag these around just to assist us. We'll get rid of that for the time being. And we're going to zoom in. As you can see, this Fibonacci is a major Fibonacci level, as acting as support on many areas. So when we came to this level, this was for the wicks. Now, if we look at this from a weekly perspective, I'm going to get rid of that level for a sec. You can see the 1.272 is also the weekly, give or take a bit. So realistically, this is a weekly level, and I'll just make it darker and thicker. That is a weekly level. From that body of the candle, this body, give it a, all right, we can bring it down a bit to be so. And the other level is slightly higher, which is at 1.72. So if that's from a weekly perspective, again, this support level, even if I was wrong with this one here, this band is still, we're not in that band, we're below the band. So this is going to be a very strong resistance level, irrespective. That is very strong. Currently, this is the weekly level that's acting as resistance, and we're getting our rejections, and you can see the candlesticks. Pretty much evident. So that gives me confidence that this is going to be very strong resistance, and we're not going to get above 35k. So if you're assuming that this schematic is correct, which seems to be the case, this was a shakeout. So if we go back to the daily, this was support. This level was our main support, and we dropped it. This was actually about the 1.618 fib extension. If I was to do that, give me a sec. Yeah, there you go, 1.618. So that was ideally our support level, and these wicks you got to ignore from that perspective. On the daily, they didn't close below it, only for that one there. So when we came down here, that was bearish, and this was a shakeout, and then obviously the last effort to shake us out, and that was it. So this whole thing was pretty much, and what happens is they want to make sure you lose your coins, and they pick them up before they go up. So this last section, this for me is the main level, as I said, with this theory. Now this schematic has different variations within it. There's 4 types, but the support level is still very much the same in terms of model. And when you lose our support model, it becomes bearish, and therefore we are bearish. Here is the other schematic that I want to apply. We had our phases. Give me a sec. When you look at this other Wyckoff schematic, the distribution took place there, very clear, the top. We had our, what do you call it, fast price move or descent. So what we do is we break that level of that neckline, and that neckline was roughly around here. Yeah, we've got this pretty much boarding wedge, neckline, resistance. So that phase took place. Then we had this phase, and you can say that this is a strong move. So that you can say that is a wave 2 to 3. This is wave 4. So if this is wave 3, that is wave 4, and we had that there. And we're doing the last wave, which is wave 5. Wave 5 could be pretty much on the downside, anything. But what I believe, this is what's happening here. We're having this, you know, a relief rally. So capitulation, relief rally in the bear market, and then down. And that's what we're looking for. This doesn't look like anything like accumulation. This looks like accumulation. And we can look at other charts, and you look at them, and you can see that they are accumulation as well. This is not accumulation. This looks like a bear flag. So if I was to clean that chart up and zoom into it, I'm going to show you how to trade this. You can see the clear lines of rejection there. So let me just get rid of that. There's that slight possibility that we can break up, which is a fake out, and then back down. And we can talk about that in detail. So the next section I'm going to tell you is how to take this trade. So what we had on the way down, on this, actually make it thicker so you can see what I'm doing. Maybe a different color as well. Give me a sec. Too much red. What's a good color? Blue? Yeah, all right, blue. We had this wedge on the way down. We had the breakout wedge and found that resistance. And then we had this component before it broke down. This level, if we were to go back to it, we can measure from the bottom to that level there, and you can see it's a 0.5 Fibonacci. The 0.5 Fibonacci took as resistance. We're ignoring this capitulation. However, it's set as you can see, it's another fib level, a major fib level, and it found it there. So we had a capitulation, and people say, okay, it's a reversal. And I was actually thinking it's going to go up at that stage, but I thought here we'll come down and back up. That wasn't the case, and that was a good shorting opportunity, and so on. Now, just because this got capitulation and this has got capitulation, people are going, yeah, it's another bottom. Well, it wasn't the bottom there, and why should it have to be the bottom here? Because we dropped. Don't forget, we're in a climate where inflation and the CPI and all the rest is bearish. So what a fractal here. We've got another wedge formation. Yep. We had our breakout. So it's pretty much in par with this. Find our resistance, but people are thinking this is more of a reversal, and there's more effort. Here is a bit more high, so that there's less interest in there. Give me a sec. Don't forget, when you do that, you can see this fake out. Yep. So with that mindset, we can and back down. All right, that is possible. The other one is there, just like here. So that model, if price comes down to this level, let's just clean that up a bit. So if price drops like there to there, understand we're going to go down. That's going to be our last chance to go. So this level, this line here is very. You can see how this is a macro trend line, support line. And I'll go back to those who haven't seen it. But this, if it comes down to here, this is your opportunity to short and get out, and that'll be a resistance. So if it bounces, short and down. Hold on, let me do it clearer. Let's go over it again. We have our micro levels in there. So this range is pretty much acting as support at the moment. If we were to lose that, we'll come here for support, even maybe a wick. your shorting opportunities there, and down it goes. Very much similar to this, as I was saying. Okay, here we had a 200 moving average. Here we have another moving average, which is the 200 on the 4-hour. This could be also risk to reward ratio. You can have your stop loss above it, or I'll put your stop loss there. But anyway, if it's coming down to there, I'll have a tight stop loss just to go above, whatever the case may be, because you never know. But that's my thinking, that this model is that section here. And where's it going to drop? I can talk about where my expectations are, and it's relatively easy in a sense. Let's get that diagram. Where's that diagram? So let's move this. There's no questions, so that's good. And let's look at, just hide this for a sec. So what we have, there's a number of ways of doing this, and I'll go through them. Swing low to the swing resistance, and you can see, if I do it properly, oh, give me a break. Actually, I should have tried that one too, just before I go there. It is actually breaking through it, isn't it? So I had this RSI, and I said if it breaks this RSI, so this is where we're going to find, no, it's going to go bearish. So it needs to go up. Otherwise, if it goes down, it's going to keep coming down. If that makes sense. Very much similar to this. This is the grind line, price grind line. And you see, as it comes there, once it breaks that level, this trend line is pretty much indicated. It's an RSI method, and once it drops below the 50% level, you know it's a change in trend, and that's where we go. So keep that in mind as another signal. So if we drop that, this is confirmation that we're going bearish. Okay, and I'll just explain how to trade that. So let's get rid of that. So that's another tip for you. And the last part, I'll just make this dark, targets. So we did our Fibonacci target. I believe if I get this right, I get that distance. Make it dark. Measure the move from there to there. We get that and we apply it. All right. And that's the first target with that method. All right. Does that make sense? Which is about 23, 24K. If we do this method, like I just did there, that was equate to 1. I can do the same with this. From the swing high, swing low, and if this is our resistance, the 618 is here. So now the 618 comes into play. So we could potentially come to this range just using those two methods there. If we were to capitulate, then we have our 1 there, which is about just 19.5 grand, which is the next major fib level as well, which is all-time high. So that's 2 methods. We can also go, if it's going to be worse, we can always put that at the bottom, and it's almost close to that level as well. So these 2 techniques, you can get that measured move to the top or to the bottom of the breakout, and you've got 2 ranges. So how we do that, you've got to keep an eye on it, because you can see how the wicks work. A wick, I would put some buy orders here, and I'll have some buy orders there. in case there's a wick that comes down there. If there's no wick, so if this was to wick down, I think what happens is we'll come down to this level and then come back down stronger. You might do that or do that. Definitely there'll be, say, this level here, if you can see this moving average, which is the 200 moving average, and that's on the 200 SMA moving average, okay? So if we look at that historically, so we'll leave that there. Let's have a look at the history of it. You can see historically that moving average took place here, and we have the EMA and the SMA on the bottom on the weekly. The EMA got touched here. The SMA is down here, and if we look further down, you can see the 200 is also applicable. It's a good area to jump in, and it's probably history repeats again. That is the bottom. I don't think it is with this market. I think there's going to be more pain, but it's a good trade, and depending on how it works, if the RSI equates to it on the weekly. So if we look on the weekly, let's get rid of this. So on the week, is that, no, that's the daily. So what we need to do is a weekly chart. And what we can do is go to another chart. And with Bitcoin base, it's a bit cleaner. You can see we're not quite there yet to the bottom of the previous all-time bottom. And there is, it doesn't have the history there, unfortunately. I think BTC, one of them will have it. Give me a sec. Will be Binance, a Bitstamp. Yeah, Bitstamp's a bit better. And you can see Bitstamp, the bottom of that weekly RSI was down there. So in two occasions, we had it all the way down with capitulation. We didn't have our capitulation yet. So what we can do is, on the weekly, if we zoom in a bit, you can see how that moving average is on the weekly, even playing its, actually that's still the 4 hour, sorry. We have that range. It might go up a bit and then come down to what I was talking about. And that could equate to that level there. Okay, that's it. If it doesn't, it's just going to drop like that. That is a good level for entry based on history. This one was slightly over on the weekly, but so we've got to look at that and look for a reversal. But the risk to reward ratio is much better. So that's another, fair bit of percentage drop. How do we know when to go really bullish? Confirmation. Well, there's a number of ways. One is with the RSI crossing its moving average, and this is way apart. And what we have is, at the moment on the weekly, it is a supporting area. And our current resistance model is that. So we can go bullish. So it took, if you look at this section here, we hit the bottom and we've got a bullish divergence in the making, but this has gone sideways a bit and then it's gone up. So we have time. If this was the bottom, we should see bullish divergence taking place. With capitulation, you see it better. With this slow like sideways. I just don't think it is at the bottom. So it could come up to this level and then just drop one more, or even below it on the weekly, and then go. And that fits the model. That's a good level to go long. Will it last? Don't know. It might come to that range and then probably drop more. Worst case scenario is there. So what we can do is, what is it? Fibonacci. Apply a Fibonacci there. And I'll just move it to the right. I would want to get that matching there just slightly. All right, just to make it perfect. The ones there, we've got confluence with those wicks. We've got confluence with that. So the next level, the moving average or 20K, worst case scenario is a 1.618. So if this is a really big major bear market, and we could potentially keep going down all the way there with all these volatility, maybe all the way down there. No one knows, of course. That's why we're going to keep an eye on this RSI and look for. I don't think it's going to go that low. I think this range is a good contender with those Fibonacci's. Let's just do this for a sec. One more look at this from a different perspective. Give me a sec. No, I got it wrong. Where am I? Gotta go with the log. How did I do it last time? Just give me a sec. Surely it's not the bottom. It might have been. Okay, that's not the way. No. Sorry, guys. I thought I had it. So anyway, let's do it another way. We could do it from like I did before. So the one is around, obviously, 618 is all the way down to the 10K. And the last technique is swing high, swing low. And yeah, we've got a lot. So the 1.618 is there. Okay. So the 1.618 is aligned with this one here. So that is a good contender along with the moving average. That is a good contender for the bottom. And if you to look at these other fib levels, the next one is this one here, which is 14, 15K. So these are the levels that I'm interested in for the bull market and the reversal. So I do think this is going to come down low to this level, 21, maybe even to previous all-time high. There is a chance that if we look at the monthly gives you a different perspective. We've got a monthly candle here. We've got our monthly candles. The wicks are there. But that's the top. So that's almost, so I like this monthly candle here. This one here that's all-time low. I think that could be really possible, which is again 15K based on that monthly candle. So there is, and obviously the previous all-time high equating to some of there. So those are the models. measured moves, don't forget. If we get the measured moves, and if it's that, use the monthly, we actually could go further down. If we use it from a monthly perspective, measured moves. Actually, the measured move will be from that wick, the body, to the body there. All right, I'm going more than I'm supposed to, but yeah, those are the things that are. There's two scenarios that could very well play out. Now, having said that, what is the bullish perspective? If we break that, pretty much go bullish for short-term gain. So if we were to go over this again, swing low, swing high, we have our levels. We're going to just tweak it a bit. We have this level as the major resistance, as you can see, equates to the 0.382. And then we have these other Fibonacci's, the 0.618 and the point. So 33K, then 35K. 35K is the weekly support, and that is going to be difficult to pass. And if we go beyond that, if it really turns bullish and there's FOMO and the markets are doing well, then this 200 moving average is where I think will be the last area to do shorting. So we haven't got that yet. So that is a bullish scenario where we do break this level and we break this 200 on the 4-hour moving average, which is acting as resistance. We've got that level, but I'm pretty confident when it comes to these 200 moving averages, just like that there, that's going to be resistance and the one. So 40K is pretty much the highest it can go, in my opinion. And if we were to equate that to previous history, if we were to look at it, and I'll give you the reasons for it. So picture this fractal. $200 moving average. So we got one rejection, and that's all we got. We haven't hit it again. And if it was to go up, definitely looking at this level here. And if we look at previous price action, I'm going to bring you the 200 here and the other 200 there. And we had something similar in a way. We had this wedge, or sorry, not wedge, ascending channel. Very much similar to that. Like what we had is I move to the downside. Give me a sec. Let's do a thick one. Then we had our ABC basically. But A, B, and C. Okay. So what we're having here is our A, B, and potentially C there or further down. As I said, I'm not confident that's C. I think that's C there. And then we have our bounce. And maybe to this level there. And if we look at the behaviors from previous, when price came down, just like ours, it had the first rally in that formation, and it got knocked, and it came down, broke that channel, found some support, and this was a strong response. So we could potentially have that strong response, and the 200 knock it back down, and then what we'll have a fizzling out, and then dump. If that happens, the more we stay here, the more likely it's going to be a deeper pullback. It still comes down to that, doesn't it? So this is a strong level of support, as we see. Maybe we'll just go through it like butter. We don't know if it gets a rejection there, but we need for it to break that level to go long. And that's a wrap. That's pretty much what I'm seeing from the lessons of the past. And So when we hit that there, I do believe we'll come back down. And we've got this trend line as well, which could act as resistance on the top. So if we're going close, I can delete all that. Bitstamp, yep. We can also look at a trend line. That's going to act like resistance. And if anything, we've already got this. So we could be playing in there. And if we were to break that level, like I said, we can do, also use the bottom. I still like that one there. And if we were to break that, it will probably line up with those moving averages coming down to this, and then down with that trend line as well. And again, 618. But I do like the idea that we might have to use the reference down there, and the 618 comes lower, which is there. Back to 33. And that is our weekly chart. Weekly resistance is definitely a strong one. We need to break that. And then we have this other one, which is the other one there, which is 35. So I don't see going past that. All right, that's it. That's all for me. And hopefully you enjoy that. Hopefully you got some things to think about and have tips to take this on.